Generalize the following transactions. Now students, the following transactions have taken place on these dates. So let us try and generalize them. The first transaction is paid rent by check. Now it involves two accounts. One is rent account, and since the payment has been made by check, the second account is bank account. Now students, rent is a nominal account. Since it is an expense, it is a nominal account. And the rule for nominal accounts is debit all expenses and losses, credit all incomes and gains. So since it is an expense, debit all expenses and losses. So rent account would be debited. And bank is a personal account. By applying the rules for personal account, we can say that it would be credited. So now rent is debited and bank is credited. So this entry would appear as rent account debited to bank account. Amount is rupees 10,000. Do mention the date here. 2011 is the year. January 2nd is the date. Narration: being rent paid by check. Now students, coming to the second transaction. The second transaction is on date of January 5th. It says that received interest rupees 5,000. Now there are two accounts. Received interest. Received means it must have been received in cash, and the second account is of interest. Cash is a real account. Interest is an income, so it is categorized as nominal account. Considering real accounts, the rules for real accounts are debit what comes in, credit what goes out. So here we have received. Since we have received, so the rules will say debit what comes in. So cash should be debited and interest is an income. So by applying the rules for nominal account, credit all incomes and gains. So the entry would now appear as cash account debited to interest. The amount would be 5,000. Do mention the date as well, January 5th, and the narration. The narration would be being interest received. Now students, coming to transaction on date number 8. It says that received cash 29,500 from Ram and discount allowed. Students, there are three accounts that are affected by this particular transaction. The first is cash account. Since we are receiving cash, obviously cash is being affected. Ram is paying us cash. So the second account is Ram. There is a third account involved, that is discount allowed. Discount allowed. Now considering the nature of these accounts, cash is a real account, Ram is a personal account, discount allowed is an expense, hence a nominal account. Let us apply rules to all these three accounts. Cash, it's a real account. The rule is debit what comes in, credit what goes out. So now since we are receiving cash, debit what comes in, cash is debited. Ram is giving us this amount of cash. So according to the personal account rules, debit what comes in, debit the receiver, credit the giver. So this would be a giver, hence credited. Whereas discount allowed is a nominal account. Nominal account is debit all expenses and losses. So in this particular transaction, there are two accounts that are debited, cash and discount allowed. and Ram is the only account that should be credited. So let's see how we'll actually present this particular transaction. Cash account debited, discount allowed account debited, to Ram. That means all the accounts that are debited are shown together to the particular account that has been credited. Cash has been received to the extent of 29,500 rupees. We have allowed a discount of rupees 500. That is also in the debit column. That means Ram had to pay us 30,000 rupees. Make sure that the debit aspect and the credit aspect are equal. Do mention the date, that is January 8th, and narration being cash received and discount allowed. And at the end, do make sure to total out the trial balance and verify that they are equal. This is 45,000 on the credit side and 45,000 on the debit side.